All right. Yeah. First of all, thanks a lot for the invite today. I really appreciate you guys giving me the opportunity to speak in front of your audience. Yeah. So quick TLDR. I'm Miya. I'm the founder of Street, and yeah, we currently still have the reserved place handle on X, but yeah, the actual brand's name is Street, and we're building the standard for tokenized startups. Crypto had speculation without real fundamentals, essentially meme coins. And private equity has a lot of fundamentals, but no liquidity. Decade-long lockups, very large minimum check sizes, and a very illiquid secondary market. So Street bridges these two. Equity-anchored tokens with enforceable rules, capital distribution, and credibility for founders. We onboarded our first 40 million US dollars in tokenized startup equity in week one. And yeah, we're heading towards 60 million US dollars this week. And then
let's go.
We target 200 million in US dollars before launch. And yeah, we're just really getting started. Private equity is like a multi-trillion dollar market. And our goal by 2030 is to bring at least 200 billion of it on chain.
Small goals.
Small goals, yeah.
I mean, it seems like, reading all this stuff you write, it seems very important to you that internet capital market tokens are both linked to equity, but also not securities. So can you just talk about like how that's possible, and I guess what an ideal ICM token looks like to you?
Yeah, sure. So yeah, private equity is kind of private for a reason. The best deals, the ones returning like up to 200 annualized, 200% annualized, never make it to the public, and they're reserved for employees, insiders, or like tier one funds with access to all these exclusive deal flow. And yeah, that's kind of why the average investor is locked out. And our goal is to change that, to create kind of synthetic equity. We work with startups from like the ground zero and tokenizing their equity under enforceable standards. So at some point when these startups grow to like large valuations, the public also has access to the same deal flow that was once restricted to the top 1% of funds.
I mean, so like my big question after reading all that you've written and even hearing that introduction here is how? Like, what are you actually doing under the hood here that allows you to go do this where many else have failed in the past?
Okay, yeah. So the biggest issue right now is definitely these synthetic equity tokens not being a security. And yes, synthetic equity in our standards means that tokens are tied to a startup's equity without being the equity itself. They kind of mirror the exposure backed by, for example, cap table proofs and enforceable rules, but don't give like direct governance or direct legal ownership, similar to like non-voting shares in private equity. And yeah, it's a way to get the economic upside of equity in a liquid tradable token. Yeah, while kind of avoiding the pitfalls of securities law.
Okay, so you're basically creating a derivative that is, or a synthetic version of the underlying equity that then is tradable on. So the idea would be that these are pools. Are they available just in an AMM, or is it sort of tradable through your platform? How do people, where do those markets exist, I guess?
Yeah, they're tradable everywhere. It was our like primary goal to make these tokens tradable on like every DEX, so the founders can choose for themselves whether they want to launch on Solana or whether they want to launch on Ethereum or on Plume. It's all up to them. That was like our main goal.
And are they seeing this as like, are they raising funds and then tokenizing? Is this part of a fundraise process? Like, how does that get staged out?
So yeah, our biggest target was that these startups don't come to us because they want to raise capital. Because if they just come to us and just come to crypto to raise capital, it's always ending in like an extraction event. Like a lot of people have like this, especially the ones that initially launched on the Belief platform, they had this perception that crypto is like just here to offer them like a free funding round, and which it really shouldn't be. So yeah, I always bring like the Uber analogy here. That's in the beginning, VCs bought like a lot of shares, and Uber used that capital to subsidize rides. So yeah, cheap rides brought users, and users brought growth, and Uber became like the dominant market leader, like close to a monopoly now. So yeah, we are trying to like apply the same playbook to startups, where instead of 10 VCs funding growth, 1,000 of holders buy these equity anchor tokens by Street. And yeah, their capital fuels adoption and narrative and distribution. I think it's pretty important that you have to turn all these holders, like these 10,000 holders, into actual 10,000 promoters and into 10,000 users, which is it's very good for early stage startups.
So you've been an outspoken bull about CLED, which is maybe a good kind of real world example of a model you're excited by. So curious, actually, you said it's the first startup which is about to give you an equity flywheel that it's pioneering in crypto. I'm wondering if you could tell us more about what they're doing specifically and why you're so excited.
Okay, so I can't leak what Abhi Patel is doing. I think that would be not very nice to him, and he should announce it himself. But yeah, he's been thinking a lot about about equity anchor tokens, because right now the biggest issue with these ICM launches is that the natural endpoint of startups is to either merge, to get acquired, or to IPO. And really, you have no enforcement that these companies will distribute like any reward to their holders when this happens. So right now, if you hold like any of these startup tokens, and if it's in a perfect world where this startup is actually like very successful and they make a lot of money and they turn into like the next Uber, then suddenly the next Uber gets acquired by something, and what do the holders have left? Really nothing, apart from, I don't know, the trust me bro promise from the founder that they will give them some cash in exchange. But yeah, there's no real accountability and no real enforceability, and we're trying to fix that.
I think you've also talked a lot about, I guess, the cultural dynamic that has existed, especially around tokens and explicitly around ICM, with I think the notoriously short hold times around this. And so I'm curious, do you see that as just a natural, relevant emergent behavior of maybe the blockchains or ecosystems, or sort of time where these things are launched? And how do you actually combat that?
So yeah, I think meme coins are kind of fading now, but speculation really never dies, it evolves a bit. I think a lot of people are very reflexive in their behavior, that when they see that that they make more money by holding something for a longer time, they will actually change their behavior. But I also think that meme coins are very cancerous, and that was like one of the main reasons why for example, Ben Pasternak has to like fight this whole culture now a bit, because he initially allows these meme coins to launch on belief. And yeah, I think you don't have to combat it where you have to like move chains or something, but you have to make sure from the beginning on that you're marketing this as not a meme coin, but something with like actual utility and with something where equity is involved.
I'm curious about the league, because I guess underpinning that answer and the importance of equity is that there is some greater trust. There's some sort of legal defensibility behind there. How does that work with sort of the synthetic equity that you're creating here? Like if I'm holding one of these tokens that represent equity in XYZ startup, and the founder decides just to run away, what recourse do I have?
So yeah, for our framework, we wanted to make sure that two things are essentially not happening: that it's a security, or that it's an asset reference security. And these are like the major two legal bottlenecks, and also the reason why I haven't even had time to build a proper website yet, and have only been in talks with lawyers for the last few weeks. But yeah,
Crypto rite of passage right there, my friend.
yeah. Anyways, we essentially built framework which allows to have this economic exposure only, to not have any voting rights, to not have any promises there, but we have a discretionary vote involved, in like a whole discretionary framework involved, which essentially gives holders like this economic upside possibility.
Okay, so it is like economic upside, but not the sort of full legal protections that you'd have from a
Yes.
security. Okay.
Yeah. So we have some things lined out. For example, you have like a 7-day unlock time. If kind of it's similar in the stock market when a CEO or anybody in a company wants to sell stock, they have to request that and write a proper reason. So we do the same, so nobody can like unlock their whole bag and dump it essentially. So yeah, we're trying to make it as like secure as possible. In the end, it should be easier to rock the equity side than to rock the token side.
Get some great lines here. I like that. Make equity more ruggable than your tokens. That's an innovation in the crypto space for sure. I'm curious where that you're referencing $40 million coming into the ecosystem. Where's that going? What are people buying? And yeah, where's that growth coming from?
So yeah, we spoke with a lot of startups in the last few months, and especially in the last 2 weeks, I had a lot of calls with a lot of startups. I think the majority of people are still not very sold on the idea of tokenizing their precious startup. It's always a I guess ambitious if you go to like startup founders and you're essentially the crypto guy that wants to tokenize them. It's never really a good look. So yeah, from like 100 founders, it's very probable that 99 of them decline, and most of them are probably going to be very angry that you even like suggest to tokenize them. But yeah, it's all about attacking the zeitgeist slowly. You have to start with 1 or 2 startups. You have to like really build these startups up, help them integrate crypto in a good way, and especially make the charts look good. So when other startups see this happening and see that this is like a real way of having good user growth and also to raise some capital, they'll also spring on the train. It's a very multi-year plan, but it's yeah, it should definitely start now, and we should definitely start building it now, which is why I spend so much time on it.
Go for it, Josh. I got so many more questions here, but
I mean, sorry, I've been buffered a bit, so I lost track where we are a little bit. But I'm curious just to get your like high level take on where you see startup building going. So you had a great quote that was, "Being an attention whore is the future way of building companies. Code becomes unnecessary once AI matures. Only the people who can ship what people want while having the loudest voices win." So curious if you could just say more on that.
Yeah, I think Cluely is like the best example of this. Like, if you ever use Cluely, you'll realize it's not that good. Like, no offense to Roy Lee, but Cluely is I don't know, tech wise, it's pretty unimpressive so far. So the only real skill you gotta like develop very well is to market a product to people, because especially like in the software as a service era, where your only goal is like really to sell the software and not to build the best product. I don't know, it's pretty important, because as AGI comes closer and as like AI coding gets better, everybody can build these things. Like every third world person who has access to these AI tools can build the next Cluely. So it's really only a question of who can market it the best way. So yeah, I think attention horse is maybe like a bold statement, but it's kind of true that only people who can market their thing the best and be the loudest can essentially win in the end. And crypto, and especially tokenizing startups, is like a good way of doing this, because you gotta be an attention whore on crypto Twitter to really come through.
But I mean, square those two ideas for me, because it sounds like the underlying issue that you're seeing with ICM is pure attention whoredom, like run amok far too early, and that the idea behind tokenizing equity here is that, or synthetic equities, is this idea that there is longer term value and that compounding value. And when I sort of hold up Cluely, or I think there was somebody tweeting about Gen Z brands. I think John was tweeting about, if you don't trust millennials to build your brand, and I think led to this discussion we had internally around like, okay, well, what are great examples of Gen Z brands? And the ones that pop to mind are ones like Cluely that are, have done a really great job at capturing attention. But I think there's a big question around their ability to sustain that absent of a great business, absent of a great product. Maybe it's in support of finding those things. So do you not see those two things as kind of diametrically opposed, or how do you square those two?
I think you have to find a middle ground where you can actually ship a product, but where you have to market it very well. I think what Clad is doing right now is pretty good. That they spend like a lot of time every day to really build like the mobile app and everything there up, while Avi has held a bit back on the whole Twitter drama side. I think there hasn't been a new cancellation in the past few months, in the past few weeks, I'd say.
Bullish.
So that's very bullish, yeah. But
Okay,
yeah,
so
I think you have to find like a middle ground for this whole thing to work. But you definitely should prioritize being maybe a like polarizing figure, so you can end up having a lot of attention.
yeah, I think maybe it's table stakes to be able to break through the messy feed right now. But I don't know. I think we're over indexing on the ability to get attention and under indexing on the ability to compound that attention over time. And if we think of these sort of like internet era brands, like, I mean, do we not believe that Charlie Munger and the sort of Berkshire thesis is going to sustain into the future? Like it feels like compounding of relationships, of insights, of trust, of product value, business value, etc. Is still the thing that has generated the most wealth, absent of this like very weird 5-year period that maybe we've been in crypto.
I mean, to be honest, I'm coming from a like trader's perspective here, but value investing has kind of been dead for the last 5 to 6 years, especially like since COVID. It kind of really died out. You have to really have this whole zeitgeist macro trading mindset where you look a lot for narratives to really make money. So for AI, it's from a value investor's perspective, it's very unsustainable. But from a like, if you look at it more from a like zeitgeist macro perspective, you'll enter the long trade anyways, even though it's like probably overvalued and probably a bubble.
Right. The Tesla bull case and maybe the Nvidia bull case right now is much more narrative driven than fundamentals and has been for a long
Yeah.
time. And I think there's always been a counter, at least I've given to folks that are asking like, why are any of these crypto things valuable? So that's interesting. So the death of value investing and the birth of polarizing narratives that you can tokenize and own a piece of. We're back to the meme coins, baby. We're back.
Yeah, I think it's important to have like an underlying equity below it, and to have like an underlying framework which actually makes these meme coins valuable. Obviously, there's going to be a premium on it if it's marketed well, but you always have to have like a sustainable framework below it, else these narratives quickly die out because there's like no actual value below it. So if you can, for example, if Cluely launches tomorrow with a complete meme coin which has zero actual equity below it, like the whole A16Z team invested in like a whole different instrument which has like no influence on the token, then it'll probably quickly die out because people can't even have the argument that this is intrinsically valuable. While if it had like an equity flywheel, it would be more valuable in that sense because more people can have like actual something feasible which they understand.
Interesting. I mean, it feels like the compelling part of your argument, I think, is this idea that there is, there are many other ways to exit other than just going public, and that not having exposure to that underlying opportunity is a detriment to, say, a token. But there is also a world here where, that clearly launches a token, it mirrors its cap table with token holders, it puts a focus only on that token being like the only public asset that exists for it. And seems like that type of asset would be even more purpose built for this sort of attention generating, narrative generating era that you're excited about.
Yeah, I agree. But if it mirrors the cap table, then it's also has like links to the equity upside.
Well, but not necessarily. You just did sort of, I guess, devaluing. You can imagine there being a purely on-chain organization that never has any equity, and it's just tokens that represent that.
Yeah, so yeah, I understand. It's like a similar argument that Ben Pasternak has, where you replace equity completely with coin. I'd say it's an interesting argument and an interesting idea, but there's I don't know, we have equity since a century. There's like a reason for this to exist, and challenging the idea of equity is, it's a very ambitious thing, and a very like private equity is a multi-trillion-dollar market. You can't just replace this thing in a matter
Yeah,
of
I
like
think
a
that
few days.
I find that very compelling. I think that most people are completely unaware of just the scale of capital that is stuck in these, not stuck, that is invested in these very private markets. And so I think from that perspective, it's a very big bull case that there is a whole lot of value there that could be publicly available. And I think fundamentally that's what crypto has done, is it's made assets available to people who've been locked out, and we've bid them up to Valhalla for many years at this point. So I'm down with that. Anyways, I think this is an absolutely fascinating conversation. We're going to be watching very closely. It's something that we've been interested in and experimenting with since the beginning of Seed Club, and I think we very much feel that very much agree that this sort of next wave, we're seeing TradFi and DeFi coming together. This, it seems the area that you're playing in here seems to have been very much off limits due to some of the regulatory limitations that have existed before. That seems to be opening up in a meaningful way, and I think we're going to start to see some folks really push into it. So excited to see what you do, and would definitely love to get you back on when you can talk maybe a little bit more detail. Maybe bring Avi on to talk about the equity flywheel. What a novel concept. See what that looks like. But man, really appreciate you hopping on today and sort of sharing your vision here, and we're excited to see how it goes.
Yeah, appreciate the invitation.
All right, man. Cheers.
Thank you very much.
Peace.
Cheers.